Hello, I'm Jeffrey Halley and welcome to Biztechasia's Inside Trading Show. This show is about trading, and every week we will discuss what trading is all about, what the habits are, the required habits are to become a successful trader, and hopefully we can also share some trading ideas and things with you to help you make money on your trading journey. Our regular guest is Phan Leung, the founder of and CIO of TrackRecord Trading Academy. V, welcome to the show as ever.
Hey, Jeff, let's talk about trading.
Hey, let's talk about trading, not you, hey? Right, as is usual, we will start with one of your famous quotes about trading.
Yeah, let's go. So there are a million ways to make money in the markets. This was a quote from Jack Schwager. He's the famous author of the book Market Wizards. And Market Wizards. It's basically interview all the great investors of our time, investors and traders of our time. Yeah. So but the downside of this is the irony is that they are all very difficult to find, right? So in fact, it's much easier to find ways to lose money than to make money. Although there are a lot of ways to make money. Yeah.
Exactly.
So with that, we can talk about one of the ways that we did make money, which was in Bitcoin. Bitcoin continues to rise. I believe, if I remember correctly, it was your first episode that you did with us as well earlier this year.
Yeah, I did it with Brian, and the first show was about these launches of these Bitcoin ETFs, and it's quite prescient that you're going to talk about it today because we can see what's been happening 1 month on.
Yes, exactly. So since your first episode, it's risen more than 20%. So kudos to you. You're a lucky charm. And just of you to join right at the time when we spoke about something that did make money for our audience as well. To recap, SEC approval was in around 10th, 11th of January, depending on your time zone, for the Bitcoin ETFs to be launched in the US. And we spoke about it 6 days later, 16th of January. And since then, it's up more than 20%. But to zoom out, go back into time. We first spoke of this buying Bitcoin, being allocating a part of your investments as well as your savings to Bitcoin back in 2023, sometime mid-2023. And since then, it's risen more than 70%. And we spoke of wider adoption by mainstream investors because of ETFs approval at some point. So it's turned out to be right. But it's not just about giving ourselves a pat on the back, but it's also to revisit the theme and to see how far it can go, right? So just to summarize a little bit, the inflow into the ETFs has been continuing. And as we spoke about in the first episode that you did with us, we expected to have outflows from the primary investment vehicle for mainstream investors at the time, which was a Grayscale Bitcoin Trust. And we have seen that happen, but inflows into all these other ETFs has been quite astounding. In fact, there was one day last week where BlackRock's ETF saw more than $500 million of inflow.
Impressive. So it's not the rotation out of Grayscale and into these new ETFs. So it's not just a movement of funds already in the market to another part of the market. We're actually seeing larger inflows on the back of that as well.
Yes, correct. So first off, the volume, it's been, as you can see from bottom left to top right, it's been going steadily up and it's rising through time. So more and more people are getting interested, and as the more broker platforms add this ETFs as an instrument for investors to trade, to buy, we are likely to see this continue. And the inflows, as you just mentioned, is not just about outflows out of GBTC, out of Grayscale into the new ETFs. As you can see, back in just when before the ETFs was approved, before they were launched, the assets under management were mainly in Grayscale Bitcoin Trust, which is the blue bar. But as you can see, as time passes, they have been dwindling, have been flowing out from Grayscale But
Mhm.
the other colored bars, which is the other ETFs, has been rising. But you can see total asset under management was below $30 billion. The total was below $30 billion, and now it's approaching $40 billion, and we are just barely a month from the launch. Yeah.
I was going to ask maybe you could explain to our viewers why investors are moving out of grayscale and putting it into these newly launched ETFs.
Oh yes, yeah. As we spoke about it too in that episode in January, it's because of the higher fees that Grayscale is charging. They're charging, I believe, probably now still 1.5% of asset under management. It goes to fees. That's a lot. 1.5% without making money. They're taking 1.5% per year from your assets. So that's expensive. Whereas all the other ETFs, they were launching with like 0.5%, even less than 0.5%. Some of them were giving very heavily discounted fees because they wanted market share. And as we can see that this is the daily ETF flows. You can see the blue bar, which is the Grayscale. It is below zero. They are on a daily basis. People are selling that, but in the other ETFs, they're all rising. They're all having inflows. So we can see that, as you said, there's a lot of rotation from Grayscale to these new ETFs, but also new money coming into it. So I guess the question to ask is how much money has gone in, how much new money has gone in, because we don't really care about old money being circulated from one vendor to the other, right? Because that doesn't add to new Bitcoins being bought. But is the trend going to sustain? So total cumulative inflows since the SEC decision has been $7.54 billion. This data was correct as of middle of February. So that would translate to around $215 million, right?
Per day.
Yeah, it's a lot, right? 0.2 of $1 billion per day. And if you are assuming they're buying it at the worst price now, which the highest price that we've seen this month, which is 52,000, that's 4,100 Bitcoins being bought per day. But of course, they've been buying since last month. They will have gotten much lower average prices. So that's more than 4,000 Bitcoins being bought per day on average over the last slightly more than a month. But the daily production of Bitcoin is only 900 Bitcoins, and that's a fixed production, right? It's only 900 per day, and because daily inflow, new money coming into the asset class is buying more than the daily production, more of the older Bitcoins are being taken out from other investors, from other weaker hands, and that's why we are seeing prices rising steadily and continuously since then. And there's Bitcoin halving event in April 2024. There's some technicalities around it, but that's beyond the scope of this episode. But what it essentially means is that production will drop by half. So from mid-April onwards, only 450 Bitcoins will be produced per day. And if inflows continue, Bitcoin prices have to go up, right? Because if inflows continue, more than production is being bought, and as we know, supply and demand exceeds supply, prices go up.
And as you can see there, 4,100 Bitcoins is a lot more than 450 Bitcoins being produced. So you're looking at a demand that's not far off 10 times what the actual production will be able to complete after April and the Bitcoin halving.
Yes, exactly correct. So if the average flow remains like this, there are arguments for flows to increase, because as more people get accustomed to this, they will get their friends to buy, everybody will buy, and investors, right, retail investors, as prices go up, more and more get excited, the press will talk about it, and more people will find ways to access it. And it used to be very difficult. You gotta find a crypto exchange that's not dodgy and not suspicious. You got to register, you got to do verification, and you got to figure out how to buy and trade. But with this, it's pretty much as simple as calling your stockbroker and finding the ETF ticker and then just clicking to buy, right? So I believe there are arguments for flows to rise, but there are also arguments for flows to drop, but even if it drops by half, let's just say by half,
Exactly.
the daily projection is guaranteed to drop by half in April anyway, right? So we're going to see Bitcoin prices going to rise. So what do we say for people who have Bitcoins already? Just hold, because whatever you sell, you may not be able to buy it back at lower prices. And for those who are not yet involved, find some way to get involved, because I think all investors with savings should have a portion of their savings being allocated to this asset class, much like gold when it wasn't yet a mainstream asset class. Most people who were involved were just considered paranoid gold bugs, conspiracy theorists. But since the launch of gold ETFs, gold has become a very acceptable asset class, and it's almost a safe haven for most people. So I believe with the new generation that are more crypto savvy, more tech savvy, and with the Bitcoin ETFs being something that they're very familiar with, it will become a mainstream asset class and a definite proportion of savings of the people that have money in this world.
I mean, I've often pondered what the actual utility of Bitcoin and digital currencies were. What do you use them for in everyday life? But you could make the same argument about gold as well. What do you use a bar of gold for in everyday life? And actually, it's a store of wealth. And the way you're putting it there, some of these digital currencies are, in fact, a store of wealth. And I guess part of trading is always respecting the momentum in a trade as well. Would you agree with that with regards to Bitcoin at the moment?
Yeah, I absolutely agree with you in that there is no real utility for gold in the real world. Of course, gold bugs and people who are very, very, very used to having gold as an asset class will say point to gold being the flashy store of wealth where you can show your friends how much money you have and stuff like that. But to an alien coming to Earth, they'll be wondering why is this human population digging stuff out of the crust of the earth and keeping it in safes, right? What is the difference, right? But you're absolutely right. There's no need to argue about the utility. There is absolutely none. But it's a acceptable store of value, and so it has become an acceptable store of value for people with money to protect, right? With savings to protect. And that is the case with Bitcoin. I think people older than ourselves, people our age, very, very used to traditional finance, will think Bitcoin is an absolute scam. But it doesn't matter what they think, it's about the future. And the future, the younger generation are very, very accepting of Bitcoin as a storage of wealth. And if prices continue to rise, and that trend will reinforce. And what we have seen is that we've seen Bitcoin selling off very aggressively for several cycles. And each cycle that it fails to disappear and go to zero, it becomes more credible, right? More credible. And in fact, we have seen that happen. We've gone through a bear market, not just in cryptos, not just implosion of FTX, one of the biggest exchanges in the world, scams, frauds. We've seen all those things, hacking, whatever the world threw at it. Bitcoin is now here, less than 30% away from their highs, from all-time highs, and we are seeing it. In fact, it recovered more strongly than the stocks last year, right? And it's been on a steady trend since. So I think question here to ask is we say we are here to help our viewers make money. What is next? I believe next is Ether ETFs on the cards. Is the second biggest cryptocurrency and more credible than all the others on the list. And this actually has some utility in facilitating smart contracts. But again, that's very technical. But where's the next? Where's the puck going to skate to? Where should we skate to? Where the puck is going next is that as we can see, Bitcoin is it has to go more than just slightly to 1/3 of the way to go before it reaches its all-time highs. But for Ether, it's more than 2/3 of the way to go before it reaches its all-time high. So I guess there's a bit of value there. If you missed out on Bitcoin, you can consider Ether as the alternative. Because I think the ETFs get approved, then yes, we'll see the same kind of price action in the weeks ahead.
That was my next question, actually. I mean, as a retail investor, they may break out into a cold sweat having to write a check out for $52,000 to buy a Bitcoin at the moment. But certainly Ether, it's a lot cheaper for a start. So perhaps in that respect, it's more approachable. Do you see Bitcoin ETF rally spreading into Ether and other more mainstream digital asset classes, but coins, I should say? But also, do you think we are going to see more ETFs? Because the way that the court ruling was written, and which opened the door for this, it didn't really specify that it can only be Bitcoin, did it? It actually left that door fairly open. So are we going to see more ETFs, even if the SEC is not very happy about it?
Yeah, I think the SEC's feelings are not really under consideration here. They were very unhappy with having to approve the Bitcoin ETFs from the statement that they published on the day of the approval. They warned that Bitcoin is not, they're not endorsing Bitcoin, they're just doing it because there's no legal grounds for them to reject. And they are absolutely right on this front, regardless of what they think, because of the fees that this mainstream, these finance giants, financial firms are making from this asset class. It's only natural for them to try to get more and more approved. And as time passes, the likelihood of that happening increases, right? Because I think as they see money being printed on a daily basis, as new money goes into Bitcoin, they will start to, especially all the others who are not dominant yet in, they do not have Bitcoin ETF that's dominant, they will try to launch it as quickly as possible and try to be the first to market and get the dominant market share. The ETFs is a game where the bigger players eventually prevails, because you don't want to be the one of 10 investors in an ETF that's barely traded, right? You want to be in an ETF that's very liquid, and that's why money will migrate to the big players, and all the players will now be trying to launch the next one to be the first.
And I guess, offer lower fees by the fact that they're bigger as well.
Yes, correct. Scale, economies of scale, right? Yeah.
That's fascinating. It's always great to have you on the show. Have you got any final thoughts for us, V, before we wrap things up?
Well, that's about it. If you are not involved, get involved. The trend is your friend. Don't try to fight it. Get out of the way if you disbelieve the trend, but never fight it. And if you can, join it. I guess that's it on that note. We can call it a day.
Thanks so much. That's it for this week's Inside Trading Show. V, as ever, thanks so much for coming on the show today.
All right. Take care. Cheers.
And we've been speaking to Phan Leung, founder and CIO of TrackRecord Trading Academy, on BizTech's Inside Trading Show. I'm Jeffrey Halley. This interview will be on our website, www.biztech.asia, as well as our social media platforms. You can also see it on the platforms of our syndication partner, TV stations, radio stations, and websites. Thanks so much for tuning in today.